All right, guys, welcome back to the channel. Um, the long-awaited double purge theory video, an enigma to trading. So let's get right into this, guys. What is the double purge theory by me, the MMXM trader? The double purge is a specific occurrence in price action that involves the manipulation of liquidity by knocking out both buyers and sellers before the real move occurs. Now, just take this statement in and what I just said here and just think on it for yourself, how important this is. Now, why do you need to have the double purge in your toolbox? Markets will only reverse when price knocks out both participants in the market. The run of both sides leads to low resistance liquidity runs. It's also where you're going to place your stop loss, given you have the correct narrative. And this is when true PD arrays form. It's post double purge. So your true order blocks, breakers, fair value gaps, they form after a double purge, not before. So one of the most important ways that the double purge helps you in the market is it's a way to profile the market. And anytime you open up a chart, what is the first thing I personally do? It's profile the market. You need to know, is it bullish, bearish, or is it consolidating? And we don't participate in consolidation markets. So what are signatures of bullish institutional order flow? That's breaking through highs and rejecting lows. So how do we incorporate the double purge in this? In bullish markets, the market will first run the buy side with closes above, then run for the low that broke the high and reject it. So we're closing above and rejecting the low, specific highs and lows. Signatures of bearish institutional order flow, breaking through lows and rejecting highs, right? So in the double purge context, the market will first run the sell side liquidity with closes below, then run for the high that broke the low and reject it hard. So for today, we're going to focus on three different formations of the double purge. There's more. I'm not willing to share them yet, but we'll focus on these three that I'm willing to share. The classical market structure trap, the one candle purge, and the AMD purge. The double purge can be used for both reversal and continuation patterns. And personally, you want to trade it as a continuation pattern in the direction of a higher time frame drawn liquidity and order flow, in the higher time frame order flow. So now what nobody talks about, what's the most effective way to actually apply the double purge? It's going to be from a high time frame key level, we go to a lower time frame range high to low or low to high, and we look for a continuation purge to the opposing end of the range. Now what confirms a continuation purge? It's a lower time frame double purge. So let's get into the first way it forms, and this is the classic market structure trap. So in classic retail market structure, what do we see? We have higher highs and higher lows, higher highs and higher lows. Now I'm going to bring you guys to some logic here. When the market is moving in higher highs, higher lows, higher highs, higher lows, the market makers need liquidity on both ends in order to take the lows to the highs, right? They need sellers and buyers on both ends of the market. So they need sellers and buyers on both ends of this here. Now, how would they possibly create a scenario that induces both of those liquidities? It will be this right here. So this is with the double purge context here. We'll have a higher high, higher low, higher high, higher low. Then we break through this high here, which confirms this as a higher high, and we have this as a higher low. So what does classic retail market structure tell you? That this low should not get broken through because it's a higher low. If you're bullish, this low should remain. So anybody who's been long here or even lower here, they're trailing their stop losses here. And anybody who's trying to get into this price swing here, as well as smart money traders on a fair value gap or order block, they're getting run out here. The sell stops resting below the higher low is where the liquidity is. So we break through this high here and we reject the low that broke through this high that caused a higher low to form. This is the double purge in terms of the classic market structure context. So it's specific highs and lows with a key level below it, not just randomly. It's specific highs and lows. Now here's a bearish example. So we have a lower low, lower high, lower low, lower high. That's the buy stops. We break through the low, breaking the lows and rejecting the highs. Specifically, the lower high is where the buy stops are resting, because retail don't believe this high will get taken. And if this high gets taken, they believe it's going bullish. So you've got stops on both ends here. So anybody who thinks it's going bullish here has stops below here. And anybody who's been trailing their stop loss or has been shorting within this price leg has stops here. So they have both sides of the market here. They have stop loss orders here, and they've triggered in long positions here before they run it lower. And this is why they run it extremely fast for the sell side liquidity here that broke the lower low. And this is a classic signature of the double purge. Now let's look at an example here on the DXY. This is a 4-hour chart. So we're going to look at classic retail market structure here with the higher highs, higher lows, higher highs here. I've annotated it here for you guys. So you have a higher high, higher low. The next price swing, we have a higher high. So the stops are resting specifically below the higher low. And you can see the market takes price back down there. Then look at the price swing here. Okay, and we'll annotate some more here. Higher low being rejected here, bullish market profile, and a key level right here. So the higher low is where the stops are. They trigger all of this, and then they run the market to this specific high extremely fast and volatile. So this is how you catch those really fast, snappy, low resistance liquidity run moves. It's with this specific signature. This is what it would look like on an hourly chart. So this is a clear market maker buy model. Smart money reversal forming at a key time. So we double purge at a key time. If there's no key time for the double purge, there's no trade idea. And then just a clean market maker buy model here. Runs for the highs super fast here. Another example here on AUDCHF. And this trade right here, this one right here, I call this live in the Discord group, okay? As this was happening, as price was moving. So for anybody else out there who thinks they know how the double purge forms or is going to try and teach it to you, ask them to trade it live. Let's start with that and watch how they scurry away and avoid the question really. So we're in a key level here. It's only a key level if it's in premium. This 4-hour fair value gap was in premium. The high forms with a double purge here. Then you have a true fair value gap here. Price continues to trade lower. Then we engineer a high here. So we have a lower high here. Then we have a lower low. We break through, come back up above this. Key time here. Asian kill zone. It's valid here because it's AUDCHF. And then we have a true breaker forming post double purge. So true PD arrays form post double purge here. And you can see the reaccumulation here at the breaker. And then they sell it off extremely fast and volatile to the double purge low, just like they did here. Notice when the double purge occurs, the move to the low here is extremely volatile. And this is fractal, right? And you can see here, if we zoom in, here are the trades I took here. That's this right here. And this right here, anticipating the double purge here. So as we're double purging this high here, I'm shorting here, down in this move here. So we've taken the low, the high, and then we start to sell off, and I was short from in here, and I held through all of this. Why was I comfortable holding price as it retraced here? Because if this is the double purge high, this is a real protected high. So you hear a lot of the time in the smart money concept community, protected highs and lows. What are protected highs and lows? It's the highs and lows that have been double purged with the correct context and narrative. Last example here for the classic market structure trap. We have our lower high here, lower low, lower high. We break through the low here, closing below. We run for the stops. Where are the stops, right? Above the lower high. We run that, we accumulate, and look at this move again. Interesting, right? How it's always a low resistance move down back to this specific low that caused the first purge. They're not going to run it there lethargically. It's going to be aggressive. Why is it going to be aggressive? Because they've already knocked out everybody in the market with this. They've taken out the sellers here, then they take out the buyers, then they aggressively move price here. Lastly, here's an example from the Discord group where I call this trade out, and we cooked this GBP AUD trade here, and I kind of forgot to add this example here where I called the trade, but anyway, we have a high broken here. There's a key level, H4 breaker, it's in discount. We break the high here, then we run back for the low here, and then straight up candles to this high, low resistance liquidity here, easy move here. And this was obviously, as I mentioned, called in the Discord group. Now here's a new technique, right? So for everybody out there who thinks they know the double purge, yeah, welcome to a new technique. Can't wait to see this everywhere now. We have the one candle purge. So we can use one specific candle as the double purge. Now this has a specific signature when we purge one candle. It must close within both ends of the candle, as you see here. This signature must be present or it's not a double purge. When you see this, especially with one candle that runs both the high and low, and we close within the first candle, this is an extremely oversold, signature, and that's why you have such a large price swing higher here. Bearish example, key premium PDA here, one candle, take the low, close within, run for the high, close within, low resistance liquidity to this low, specifically this low. Another formation here with the one candle, right? Run the low here, open low, close within, run the high, and close within. It must close within. Then we run for the low, specifically this low, extremely fast. Now I urge you guys to go into your charts and look for this, okay? And look at the candle that forms post this. Is it small or is it extremely large? Okay, that's a study for you. Few examples here I'll share with you guys, and I'll show you some call outs and trades, you know, where I call the trades beforehand, unlike the rest of them. Here's that one candle. Okay, we have SMT at this high. So this is a key level. It's an old high. We run the first candle's low. Do we close inside? Yes. We run the high. Do we close inside? Yes. This is a real double purge here when we close inside both ends. It cannot close with the bodies below either high or low. So we run the high, close within, and look at the move here. Wouldn't it be nice to be able to catch this kind of candle on the daily chart, running for this low here? How do you even anticipate candles this big? That's exactly this. Let's hop into another example here. You can see the trade I took here. This was CPI. We had one candle here. We had a key level, daily OB here in a premium. Market is bearish. We run the low of the candle. We close within. We run it twice here. We run that liquidity twice, close within both times. Then we run for the high, close within. Interesting. Once again, the candle is massive. And here's another gem for you guys. When you have this signature pre high impact news such as CPI, NFP, which this is what this trade is. This is CPI. This is how you can play those moves. Now, obviously, you know, if it's within your risk management to be able to risk your funded challenges or whatever, with a CPI move, when you have this signature, I urge you to watch this in the news days. Let's keep going here. Another trade, actually trading this and calling it beforehand. One candle here, key level, premium to discount. We open here. This is a bearish candle. Open high, run the first candle's high, run for the low here, close within both ends of the candle. Okay. Okay, and then we have price run back down here, then open low high close. We run aggressively for this high here. This is a high impact news day. So that gem I gave you guys, when you see this prior to a high impact news day, this is how you can catch that move. And that's what this is right here. Few more examples here of the double purge. So at the high of this turning point here, market engineers a range. We run for the lows, then we run for the highs, closing below the lows and rejecting the highs. This becomes a protected high because it's a double purge high. Now look at this, right? One candle, close within the low, close within the high, big price swing down, protected high, right here. Same thing occurs here. Interesting, right? How it just keeps being on big moves. How it just keeps being big moves after the double purge. Again, here. Refuses to close outside, runs the high. This little high here becomes protected. Big move through the lows. And lastly, one here. Runs the low, closes within. Runs the high, closes within. Remember, that's extremely important. And then we run aggressively, specifically for this low. Here's a couple pyramiding and trades I took here on GBP CAD. We ran the highs here, then the lows here. This was digging in deeper to reach into a key level. Then we reject here. Price accumulates, drops down below some lows, and we have a double purge here. We run the high here, close within, run the low, close within. Protected low, true order block here. Price comes back down, respects it. Then we have another double purge here of this one candle. Closes within the high, closes within the low. True order block forms post double purge. We run up here, big move again, post double purge, right? Retrace, back down into a true order block that you know will hold because this is a protected low due to the double purge. And then I didn't annotate it here, but look at this one candle. We run the high here, we close within, then we run the low, close within. This is a GBP CPI news event. There are my executions trading the double purge. Big move once again. So both the CAD CPI news event and the GBP CPI news event had this specific double purge before the news event. So hint, hint, yeah. Once again, still going with the one candle purge here. Low to high here. We're in a premium. Small fair value gap here. So key level. One candle here. We open, trade below it. So we run the sell side first. Then we run for the high. We trade above the buy side, close within. Huge, massive candle. And 3 drives here as well. So this didn't end up being a protected high. However, this is the one time it filled, I guess. But notice again, the big, large expansion down specifically to this low. This is how you find these huge candles in price. Gold here, double purge on the high here, the low here. Market's running for this high. There's a key level here. Gold's extremely bullish. Then notice the one candle purge here. Run the high, close within. Run the low, close within. This becomes a protected low after the close. Massive candles post double purge. Lastly, the AMD double purge. So classic accumulation, manipulation, and distribution with a double purge within the accumulation. So this is a way the market tips its hand to you with the AMD. And once we have this here and you have a true breaker right here after the double purge, inverse here, runs the sell stops first, runs the buy stops into a key level, price trades down, retracement into a true breaker because it formed post double purge. Example here, this red line here is a premium key H1 FVG. Engineer a range here, market chops within the range, runs the low here, very small, but still runs it, that's fine. Run the high into the key level, the market can truly reverse now after taking sell stops, then buy stops when we're bearish. Then it trades lower. Now we have a double purge here of this candle. So we run the low, close within, run the high, close within. Then we sell off, leave a fair value gap here, true PD array, true order block here. And I've slapped a fib on this because there's a very specific technique here. And I'm not going to elaborate on this, but it forms at specific times and within a specific structure. So I'm going to leave this one here and look at the respect of the bodies there to the fools who think they know anything about the double purge. Let's see if they can figure it out. If they don't, I'll reveal it to you guys in due time. And then massive sell-off here. So a very quick, straight to the point video on the double purge. I wanted to share this concept without too much in between. I wanted to show you guys the different techniques, why it works, and I want to see you guys apply this in your trading. I'm going to go deeper into this with a more long, detailed talk on it, but I didn't want to do that in this video because I know attention spans are short. So I'm going to keep it short and sweet just to show you guys the formations of the double purge. But we will get more in depth onto this with a full-on lecture with a longer attention span. And once you understand this deeper, I'll have a video dropping in the next couple weeks to go deeper on this. And obviously, if you guys want to join the Discord group where I call price beforehand, where I trade the double purge beforehand as price is moving, link is in the description down below. All right, guys, have a good day.